Mortgage rates dropped for the second week in a row, but that didn't revive demand for potential homeowners.
No, indeed. And although rates have calmed in recent days, they are still significantly higher now than they were a year ago. The influx in the market has caused many to reevaluate their budgets or drop out of the market completely. The average interest rate for a 30-year fixed rate mortgage decreased a fraction of a percentage point to 5.74%.
So what does that mean in money? This time last year, the average 30-year mortgage rate was at 2.98%. In 2021, a $250,000 loan would have cost home buyers a monthly payment of a little more than $1,000. With the current weekly average, that same monthly payment jumps to more than $1,400.
Joining us now to talk more about this is Danielle Hale. Danielle is the chief economist for the real estate listings website, realtor.com. Danielle, welcome. It's great to have somebody who knows about real estate to sort of break this down for us, because what does this fluctuation in rates mean for the market and for potential home buyers? You know, they're trying to navigate all of this. What should they think?
So potential home buyers have had to face much higher mortgage rates throughout most of 2022. And even though we saw rates pull back a little bit this week and the last week, they're still much higher than they were at this time 1 year ago. And it's not just higher mortgage rates, but buyers today are also facing higher home prices. So if you combine those two factors, it's not just a $400 monthly payment increase, but probably more like a $700 to $800 monthly payment increase to buy the typical home today. So the market is getting much more challenging for home shoppers. That's why we're seeing some of them just put their plans on hold so they can get into a situation where they're more financially prepared to navigate today's market.
So Danielle, I mean, are there any indications that the market will ever return to the 2021 rates of 2.98%?
I wouldn't count on it anytime soon, especially if you're a home shopper. We know that the Fed is normalizing short-term rates by pushing them up to fight inflation that has really gotten way above the typical 2% target range. So they've got some really aggressive action to do. They've been taking aggressive action. That's one of the reasons why we've seen mortgage rates move up so quickly. If you think back, I know it seems like a long time ago, but just at the end of December, rates were right around 3%, and now they're up well above 5%. That's a big shift in a very short period of time. It's going to take shoppers some time to adjust to these rates and what that means for their budget. So my advice for shoppers in the market is to prepare for some rate volatility. We've seen that rates can climb. They can, in fact, drop from week to week. But when you're thinking about your home price target when you're shopping, you want to consider a range of interest rates so you know how these changes are going to impact your bottom line. I'd like to call it rate proofing your budget. So considering those higher mortgage rates and knowing how that affects the home price that you're targeting when you're searching for a home today.
And so for buyers who are still on the sidelines and are feeling like, we missed the boat on the low mortgage rates, right? When would you advise them on the best time to buy?
So with the number of homes available for sale starting to increase, but still quite low, I like to tell shoppers it's the right time to buy when you find a home that fits your must-haves and falls within your budget. If you can make the numbers work, go for it. Put an offer in. Rates, as we know, have dropped recently. They could start climbing again, and you don't want to feel like you missed out on an opportunity because you were waiting for something else down the future. So if the numbers work, go for it. That said, we usually see that given the seasonality in the housing market, the fall can be a really good time for buyers. There's still sellers participating in the market who want to sell homes before the end of the year. At the same time, a lot of buyers have either found a place to go to or have decided to rent, and so they're not as active in the housing market, and that can really shift the market balance. So it's a little bit more favorable for buyers if they're looking in the fall.
All right, I like the idea of rate proofing your budget. Seems like very sound advice. Danielle Hale, Danielle, thank you.
Absolutely.